In the energy space, have to talk about WTI crude, which fell over 4% on its lows. It was actually down almost 4.5%, breaking through $57, finishing the day down over 3%. At least it got back above $57. Now, this was only days after hitting that $60 level on the upside, which was supposed to be a pretty important level. We did not close above it, but we did break above it, so it was very clearly a false breakout. Crude oil's down 3 of the last 4 days. If you look at it on an open to close basis for the same day, down 3 days in a row. But if you look at it on a close of the previous day to a close of the following day, 2 of the last 3 days we were lower. But today was really the big move. Biggest down day we've seen since the middle of June. And that may not seem like very much of a distant memory, but the volatility increase has been sudden and sharp. Now, this is despite OPEC and OPEC Plus agreeing to extend those 1.2 million barrel a day production cuts for another 9 months. So that's going to go into 2020, this particular production cut. It's supposed to be rebalancing the market. It's not doing that right now, although we did see a slight dip in U.S. production in the 4-week moving average from 12.3 million barrels to 12.25 million barrels, but not big enough to affect price. And again, that demand, the potential demand decrease is not showing through. Even though we've got a trade truce between the U.S. and China, the trade worry is still hitting the market. But Iran is part of the reason, showing perhaps a crack in the cartel that is OPEC, with Iran threatening to veto the admission of Russia into OPEC. Now, this was a big deal. It was talked about at the G20, and it was talked about at the 2-day meeting of OPEC and OPEC Plus. We always talk about OPEC Plus being this sort of fictional cartel. Saudi Arabia really wanted Russia to be an official member of OPEC, but Iran says they'll use their veto to block that, and that is in protest of the UAE and Saudi Arabia supporting U.S. sanctions on Iran. So it's not really as strong as it used to be, and as that window of influence for OPEC closes, the admission of Russia would be a very big boost to the cartel. Iran saying they would veto that, at least at this point. That might be just a negotiating ploy, but they're sticking to it at this point. Either way, the production cut is going on, but again, the trade worries affecting demand potential. The U.S. released a list of potential tariffs on EU products now, $4 billion in goods. So again, the trade worries affecting the demand concern and the demand picture going out, and that is clearly weakening the crude oil market in general, weakening commodities. You're seeing it in iron ore, you're seeing it in copper as well. But crude oil really the big sort of leader in this. And also the spread between Brent and WTI widening again. This in part is due to Iran potentially sparking tensions in the Middle East that might end up being military tensions. Again, going against Saudi Arabia, not a good idea for peace in that area, going against the U.S. sanctions by increasing Iranian production, kind of doing it to the EU as well, because the EU is asking them to stick to the original Iran nuclear deal. So all of this pushing crude oil prices lower until there's actually a flare-up in the Middle East, which we're not hoping for. It looks like the weight is going to be on WTI more so than Brent.